Okay, this is the July market report for Southeast Michigan, and going to including May and June and the numbers, the market picked up dramatically in those last 2 months. It wasn't surprising because it really was the carryover for the slow start of the year with weather-related activity from January, February, March, and even into April a little bit. So we saw great numbers and great activity. But it also wasn't really a good indication of where the housing market really is, because we feel a lot of that jump in May and June was pent-up demand being released. I think really in the next 90 days through July, August, September, we'll really be able to feel where the market really is. We have some positive things in the market. Certainly listing inventories are low. Buyer activity is very strong. We do think buyer activity is probably less than it was last year, but so is the listing inventory, so it feels about the same as far as market activity. The cost of owning a home is about 20% more this year than last year, so we do know that some buyers probably are pulled out of the market because of that reason. On the other hand, rates are still low. Values, although they've come up quite a bit, are still low, so we think there's still a lot of buyer demand in the marketplace. Now, specifically for Western Wayne, Oakland, Livingston, and Macomb counties, the market showed, just as we said earlier, the market activity is very strong for sales. New listings entering the market was also very strong, and actually in the last couple months, May and June, actually exceeded last year. So that's really a good leading indicator of where the market is headed as the new listings come in the market. Now also, new buyer activity was just as strong, so listing inventory still declined in Southeast Michigan, but they're declining at a slower rate. And we're watching that very closely, because as that decline rate slows, at some point it turns to positive and we actually will start to see listing inventories rise. We've seen that in the $500,000 and above marketplace already, and we'd expect that because the $500,000 and above, the luxury markets, were the first to recover, and therefore we think they'd be the first logically to sort of settle down, and we've seen that. The listing inventories for the $500,000 and above market are actually starting to rise, and we're seeing the home values, although rising, still consistently not rising as fast as we're seeing the under $500,000 market. Overall, you can expect for the next few months much of the same, and actually into next year, much of the same what we're seeing. Only a little bit month by month, the market coming a little bit more closer to balance, so that frenzied activity will slow a little bit, and we'll probably start to see through the balance of this year, instead of showings being measured in terms of showings per day, it'll be more like showings per week for listings, and for offers, instead of having offers per week or even sometimes offers per day, we'll move more towards the normal world of offers per month. So we're not there yet, and we'll see in the next 90 days whether there's still some pent-up demand still to be released, but that's where we're headed in the market for the balance of this year into next year.